Hey guys, and welcome to today's video. Today we're going to talk about how to trade the double bottom like a pro. In today's video I'll be sharing with you a few different conditions that you can add to a double bottom in order to make it more accurate and more profitable as a trading strategy. And we'll also be talking about exact rules for a double bottom that you can create in order to make it less subjective. So I'll go ahead and let the intro and disclaimer roll and we'll jump right into it, guys. If you're new, go ahead and subscribe here to the trading channel to be alerted when we come out with other free educational tutorials and content. And also in the description below, I have links to some free training that we offer over at thetradingchannel.net. So if you're interested in that, go ahead and click one of those links while the intro and disclaimer roll, and I'll see you guys on the other side. All right, guys, so let's go ahead and dive into today's video. We're actually going to go ahead and do some live trading here. I'll drop down to a smaller time frame. And I'm sorry if I sound hoarse, guys. I'm actually feeling a bit under the weather, but I did still want to produce some pretty good content for you guys. So here, as you can see, we have this nice double bottom. We'll discuss a little more about this, but for now, let's go ahead and place an order and buy these up here. All right, so there we go. We've purchased our double bottom entry, and we'll see how this trade plays out as we talk more through this video. But in the red here, this is a zone that we created out on a daily chart that indicates a nice level of structure. So now let's go ahead and scroll up a bit and take a look at some rules we can use for a double bottom. So we all know what a double bottom looks like, right? We have a market that's trending down. It looks something like this. And then all of a sudden we get down here to a level and the market retests its previous structure, right? Previous support holds again as support, and the market breaks above our neckline of our double bottom and possibly can signal a reversal. So what's a good way to define this? Well, we've talked about this in a few other videos, but the rules I use to define a double bottom is the wick of the second bottom must at least touch the body of the first bottom. So that would look something like this. If I go ahead and grab a black line, use this for the wicks. Here's the first bottom, and what I would need to see is a wick from the second bottom that at least touches the top of the body of this first bottom here at the black horizontal line. Now, what would make this invalid? Well, if the wick did not touch the body. Let's say we had a candle like that with no wick, the wick was on top, then that would not be a valid double bottom. We need the wick to at least touch the top of that body to be a valid double bottom. And another thing that's going to make this invalid is if we get a close below right here, because a close below would mean something totally different in the market. So if the body of this second bottom closes below the wick of the first bottom, then that invalidates the double bottom as well. Everything in between counts as a double bottom, as long as the body of the second bottom stays above the wick of the first bottom, and as long as the wick of the second bottom touches the body of the first bottom, then it's a valid double bottom. All right, so since we have that, we'll go ahead and delete a few of these. All right, so now we have a good understanding of the rules of a double bottom. And if I went a little too fast for you, then make sure just go ahead and rewind the video. If you watch that a couple of times, I'm sure you'll get the hang of it. And a double top is going to be exactly the opposite. We'll run through that really quickly. If I scroll to the side here, market in an uptrend, all of a sudden stops, retests that resistance level, falls, possible reversal. We'd be looking for the wick of the second top to at least touch the body, the bottom of the body of the first top. So the wick has to at least touch our horizontal line there, the body of this first bottom. And of course, same thing, we can't close above the wick of this second top, otherwise we're looking at trend continuation. So that's a really quick look at the rules for a double top and double bottom. Now let's talk about some other conditions we can add for these two strategies to make them more accurate and more profitable in our trading. Well, for the first thing we're going to discuss, we actually have to zoom out to the 4-hour chart. And here, as you can see, if I move our box and horizontal line out of the way, we had a really nice, and also I'm going to change this, we had a really nice candle wick in this area. I'll just go ahead and circle it for you guys, and that's definitely a condition you can use. You can wait until you get a long candle wick on a higher time frame before you start looking for your double bottom opportunities. That's showing me that there's buying pressure in this area. Now again, we had this zone up here, the zone that we pointed out on our higher time frame as a possible reversal level for this market. You see this market has now started trending down. And if you zoom out to a higher time frame, you can see that this is actually just a pullback on a higher time frame uptrend. So that's why we're interested in a double bottom in the first place. Then we get this nice candle wick to the bottom on our 4-hour chart, dropping down now to a 1-hour chart. And another condition we like to use with this double bottom strategy and double top strategy as well is actually incorporating an RSI indicator. And on this RSI indicator, we're actually looking for something called divergence. So here, if I zoom in, you can see that we have a market that has created a low here and a lower low. Now, with that being the case, we're looking for divergence on our RSI indicator. And divergence is when after a low and then a lower low is created on price action, there is a low and then a higher low on our indicator. Now, divergence can be spotted not only on RSI indicators, but also on MACD and stochastics. But for today's example, we're going to be using the RSI. This is a condition that incorporates really well with double bottom and double top strategies. And as you can see, this double bottom is actually following the rules of our double bottom strategy as well. We have our low right here, no candle bodies, close below that low. As you can see, we're above our candle low here. And these most definitely touch the body of the previous bottom. So that meets all the rules of our double bottom. Plus we have that divergence. We have long wicks on higher time frames showing us buying pressure. And we have a reversal zone on our daily chart, all coming together to make this trade. And what I'm going to do is actually record this trade live and see where it goes from here. We'll see if we can get a nice pop, a nice little bounce, and some profits out of this market. For stop loss placement, what I'm going to do is actually just place a stop loss, 1 ATR, which is right now is around 10 pips, below our previous swing low created by this double bottom. And for first targets, we'll be looking for a 1-to-1 risk reward and possibly a much higher target too. If we zoom out, and as I said, this pullback is nothing but a retracement on a higher time frame. So for second targets, we'll be managing our position up to our previous highs in through here. So obviously it'll take a while to hit second targets, but what I'll do is go ahead and pause the video, and if we get closer to first targets, I'll start recording again and show you guys how this trade plays out.
Yeah, we said we let it go, but we settled for the last. Couldn't let you want it.
All right, welcome back, guys. So as you saw, we did get a move up from the double bottom entry we had. This move up was enough to hit our first targets right in through here before the market did push down and stop us out for break even on the second part of that position. But in this video, I just wanted to give you guys a couple of examples of conditions that you can add along with some simple entry reasons like double tops and double bottoms, along with any other entry reasons that you use in order to create a more profitable trading strategy than as if you were to just use those entries by themselves. So I hope that you found it to be valuable, and if you did, please go ahead and click that like button for me, guys. If you'd like to get your hands on some of the other free education that we offer, some other free trainings and free courses that we offer at the trading channel, then you can just click the link in the description labeled free training. If you're having trouble becoming profitable on your own, and you'd like to learn the actual strategies and techniques that I personally use in the market on a daily basis, then I'm going to leave a link in the description for the EAP training program. And that program's already helped many traders become profitable and independent on their own. And if you'll stay till the end of the video, you can look through some of their testimonials. So guys, I hope you have a great rest of your trading week. I wish you guys the best of luck on all your future trades, and I will talk to you in the next video.